People who've retired are having their pension destroyed by currency devaluation and inflation. And this is what we're going to show in this video. And we're really going to sift through the data. So let's get right into this. So let's start off with the Canadian dollar versus the US dollar. We got to think now, where are the top places that Canadians are retiring to? United States, Mexico, Costa Rica, Panama. Those are your main four. So let's see how the currency is performing against those. And we have to remember that right now the dollar has pulled back quite a bit. This got really extreme last year. I think it was around 14% at the worst point. So really these fiat currencies like the Canadian dollar are really starting to destabilize. We've seen a lot of FX volatility, and you have to remember that pensioners in Canada, pensioners in the UK, they're getting paid in pounds and Canadian dollars. They're not getting paid in the United States dollars. So if they live in the United States or they live in Panama, then the currency going down in value versus the United States dollar impacts them a lot more. And then you've just got to think of inflation, especially in the United States. Healthcare costs have rose substantially. And when you're talking about somebody who's retired, their healthcare costs are extremely high. Anyway, we talked to a couple recently who moved back to Canada after living in the United States in Arizona. They simply could not afford their health insurance anymore, which was $723 a month. So let's move on here and talk about the Canadian dollar versus the Costa Rican colon. So if you look at the Canadian dollar versus the Costa Rican colon, it's down near 20% in 1 year. These are substantial drops for the Canadian dollar. The Canadian dollar has fallen against a lot of these currencies where these retirees are typically going. And if you couple that with the declines in bonds that we've seen, the declines in stocks that we've seen, it's just meant it's the worst time to retire ever, essentially, because you have to think about it in the context of what's been going on. And then if we look at the Canadian dollar to the Mexican peso, you can see again, it's down near 20% in 1 year. And this isn't just a 1 year thing. If you go to 5 years, in 5 years, it's down nearly 10%, around 7.5%. So that is a massive decline that we've seen in the Canadian dollar versus the Mexican peso. So you have to remember that people who are living in these countries, people who are drawing a pension in Canada in Canadian dollars, they're getting absolutely decimated. And it's not just a story of even Canadians, because even people in the United States who retired to Mexico are getting screwed, because the US dollar versus the Mexican peso is also in decline. We had this comment the other day, and I really wanted to highlight it because it shows what's really going on, and it inspired this video, and it inspired me to look into it in a lot more detail. It was something that I didn't even think about. And this is what I love about this channel, is you guys leave me comments. I'm reading through the comments, and sometimes there are things that come out and make me really question and think about things even more, and potential cross currents that I might have not considered before. So this is really interesting. Daryl essentially said, I'm a Canadian retiree living the good life in Mazatlan, Mexico. The lowly Mexican peso is decimating the Canadian dollar. Almost every time I go to the ATM to withdraw pesos, it costs more Canadian dollars. It's becoming so serious that it's going to eventually imperil my retirement. Canada is being destroyed in tandem with its currency. And why would the Canadian dollar be destroyed? I mean, think about it. The economy is fantastic in Canada, right? No. The thing is, investors in certain markets are starting to realize and see between the cracks and realize that they go a lot deeper than they first thought, especially when you're talking about household debt. And when you're talking about the ability of Canadians to pay back this debt as well, a lot of investors are realizing that Canada is a potentially very risky place to park your capital. It's an economy that is based entirely pretty much now on a bubble that is imploding right before our eyes. It's really just a terrible thing, and I feel sorry for these people who are in Mexico and they are essentially seeing the currency just be devalued. This is one of the great things about holding gold, in my opinion, is because if you're just holding gold versus stocks, bonds, whatever for retirement, this is what really shields you. Because imagine that you're withdrawing gold right now and you're starting to sell off your gold because you're in retirement. Well, that's a totally different thing. And I like to call this the golden retirement. If you're doing that, what are you looking at? You're looking at nearly all-time high prices. What gold buys of Canadian dollars is nearly at all-time highs right now. So it's kind of insane. And then look at this. This says right here, Canada no longer among the best countries for retirement in one of the worst years ever to retire. And this was in 2022. It does beg the question about retiring in Canada even so anyway, because Canada is extremely expensive as well. And for these factors as well, Canada isn't a good place either. So it says that comes as soaring inflation, aggressive interest rate hikes, and a wobbly stock market wreak havoc on retirees' finances globally, putting 2022 on track to become one of the worst years ever to retire, and possibly 2023, 2024 are likely going to be even worse than that. And then what could possibly be the reasons why this is happening? Well, let's take a look at Mexico, for example. Mexico interest rates are up near 12%. So that is really, really high. Mexico's interest rates right now are really, really high. The interest rates are currently at 11%. So you think about that. They're at 11% right now in interest rates. And what are they saying inflation is at? They're saying inflation is at 7.82%. So you're talking about positive yields if you hold Mexican pesos. If you buy Mexican government debt, you're actually getting a positive yield. You're getting more than inflation. You're actually getting a return on your capital. So Mexican pesos are a safer store of value, at least right now, it seems, because interest rates are higher than inflation, whereas most of these currencies like Canada, you're seeing the exact opposite of that. So when you look at Canada, interest rates are at 4.5%. Whereas inflation, and we know that Canada's inflation would be similar to Mexico because essentially they use the same trade routes. Look at this. They're saying it is at 6.3%, but is it really? And that's a negative yield anyway if you're holding that currency. Still, your money is being devalued through inflation. And that is if you believe the CP lie. The reality is it's much, much worse than the inflation rate that they're saying, which is 6.2%. We know we could double that, if not triple that, to get to the real rate. I mean, I was in the grocery store today because we've been traveling and such. I haven't been to get groceries in about 4 or 5 weeks. And I was just absolutely shocked because a lot of the products that we buy had gone up 20, 30% since we were last there. And it's just unbelievable. This is within 5 weeks, essentially. So I'm just like baffled by how high the prices are going. And this is just going to continue, unfortunately. And long term, I think this will continue as well. The Canadian dollar will become worthless when it comes to your global purchasing power. So if you plan to retire anywhere else but Canada, you're going to be screwed. And even in Canada, you're going to be screwed because the government is lying to you with their CP lie. Inflation is way, way higher than they say it is. And we know that because of our good old friends at Shadow Stats. Shadow Stats, fantastic data. You can go check this out. It's in the description. This is based off the US CPI, but we know Canada is tied at the hip to the US economy. You can see that inflation, if you measure it as the 1980s base CPI, it's around 15%. And they are following the same path. You can see that. But it's the CPIU, it's the CP lie that is essentially just understating inflation massively. So we are being lied to constantly, and we know that we cannot trust the government when it comes to these figures. When it comes to any of their figures, they are always rosy. They are always doing this manipulation to it in the background, and they are not the best figures that we can look at. And we know, even looking at the old figures like we have done with Shadow Stats, that inflation is running way higher than 6.2% with interest rates lower than that. How is that an incentive to hold Canadian dollars? Think about it. You're looking to park your money in a currency Why on earth are you going to hold Canadian dollars? And let's face it, most investors even know that these CPLIs are just completely phony. Most investors know that anyways, so they're going to steer clear of Canada. And then you add on all the economic risks on top of that onto Canada. It just looks like a complete train wreck. And I think, it'll go up, it'll go down versus the US dollar and other currencies. However, long term, into the future, over the next 10 years, it's going to go down and it's going to get worse. We could be hitting 65 cents, 63 cents against the US dollar. And that's really going to force some pain for a lot of different people, especially pensioners and retirees that live abroad. So anyway, if you've enjoyed this video, you might like this video here. It's about pensions too. You should really check that out. You might also like this video that the YouTube algorithm recommends. I will see you in the next one. Take care of yourself, guys.